Now, the private credit sector has grown rapidly, pretty rapidly, into a $1.6 trillion corner of the financial market. As private equity has stumbled, investors have been keen to plow more money into its sister industry. But borrowers, of course, are also increasingly feeling the strain of stalling economies, trade tensions, and persistently higher interest rates. Now, joining us now is Mathieu Chabran, co-founder of Ticoho Capital, a global alternative asset management firm with more than 50 billion euros of assets under management. Mathieu, as always, thanks so much for joining us. Look, there's a lot going on, for the worse or for the better. I think you said you're eyeing some 85 potential acquisitions. Is it still the case, or are there more because of volatility?
I mean, it's always the case. I mean, you know that the industry is going through a lot of consolidation, no doubt. You saw many headlines, transactions, some flagship transactions, but being in Europe, in the US, even in Asia, we're seeing this trend now because scale has become, the name of the game. And, yes, today you've got some generational shift, some cyclical, opportunity as well. And then fundamentally some structural changes that I'm sure we'll be discussing.
I mean, the structural change is what? Is it trade wars? Or is that something that you can look through? Again, do you see valuations getting down and so being able to find a better deal? Or are people just looking inwards because they're a little bit afraid of the future?
I mean, not yet, but clearly, you saw what has been happening over the past few weeks and even more so over the past few days, as you were on stage, earlier on. I mean, you saw what Hong Kong said, about holding some treasuries. And, after the sell-off in a month ago, after the downgrade, when you have this whole repricing of asset classes, obviously some repricing will happen even in our industry, for sure.
Where do you see the biggest value? I mean, if you look at industries, I know you've been in the past, keen on defense, but it was climate change. Has the sectors you want to be invested in changed?
No, things haven't changed. I mean, you heard that this morning. Even the Prime Minister, was talking about the importance of keep, investing in renewable, in decarbonation. So even being here in Qatar and after, last week's trip of President Trump, in all the wider, region, I mean, the themes have not changed. I mean, we've entered a world post-COVID with a higher interest rate, lower growth, and you have to focus on those mega trends, and energy transition is one of them. Defense is definitely one of them. Cybersecurity is one of them, and we are active across those industries.
What do you see in terms of valuations in the Middle East? Is there anything that you're eyeing specifically with companies in this region?
What is really interesting for the region, for us, where we sit, primarily in Europe, obviously increasingly in the US, is taking some of our portfolio company into the regions. There are huge needs, for investment. There's no shortage of capital here, but there is huge need of investment, and we bring part of this technology, this know-how, this savoir-faire, of many of our portfolio companies, and they benefit from that, bigger market share, exchange of technology, and that's really the opportunity we see here.
But can we expect new deals, or is it just fundraising?
No, I mean, well, it's really both. I mean, there is a rebalancing of capital. We discussed that at length these past few weeks. Obviously, President Trump came last week, and a number of headlines, deals were announced. But you saw what happened yesterday at Truth France, for example, in Paris that you guys covered too. There is some huge rebalancing of capital coming from Asia, from the region here, and from where we sit at Ticoho Capital, we're clearly, taking advantage of that.
Mathieu, do you have a view on the dollar, and do you need a view on the dollar to make better investment decisions?
No, I mean, I'm more concerned about the debt level in the US, obviously the treasuries, and the consequences then, on dollar. I think I'm with Jamie Dimon, when he said yesterday that there was a lot of complacency. I think we are on this fine line between comfort, because it's always very comfortable to think that will remain, the major assets and currency, and it's a fine line between discomfort and complacency. I think we should all be very careful. There is too much debt in the system, certainly in the US, in other parts of the world, and this wider, organization where you always need the marginal dollar coming into the system to keep the wheel flying, if I may say. We should be very diligent here.
So are you a bit wobbly on treasuries? What's your take on treasuries?
I think I am. I mean, we saw that as soon as we had the downgrade on Friday, you had some sell-off. Then it came back. I mean, a month ago, it was about effectively the spike in the 10-year, interest rate. The Fed, obviously can step in, but one should not forget that it comes down to supply demand. And there is a lot of supply coming, we know that. I mean, structurally, there are some issuance coming. And so we should make sure that the demand stays, on par with this demand, or with these supplies. Otherwise, we're going to be drifting, and then we could get into some concerns, I guess.
But Mathieu, how do you explain this complacency? Because there's just a lot of news coming at you from everywhere, right? It's geopolitics, it's Russia, Ukraine, it's what's happening in the Middle East. So it's that the market, is a little bit startled, and so just hangs on tight to what they know, or are things really being mispriced?
I think it's a bit of both. I think we're coming collectively out of a period where we all thought that there was, some kind of a moral hazard, that you could keep printing, that money was free. And now, see what's happening, in the US mid-market default rate. It's spiking, and that was spiking, even before the tariffs, because that's the money that is due from the COVID-free era. And so there's a bit of that. I think the fact that the market, got used to it, and also you see the disconnect. The public equity markets, if you tie that back into the cost of capital today, both from a risk-free rate, but also the credit market that, may be open, but not for everybody. And so here I think there's a little bit of mispricing.
So how much do you worry about private markets?
So private market, depends what you call private market. I don't think we have time, to cover, all of that. But we are very careful on this default rate, going up in the US, because they start from a much more aggressive starting point. It's less the case in Europe, lower level company. In Asia, very appealing, market right now. So it's not a systemic worry, but we should be very careful how it is being distributed. And I know that there will be some discussion later on, at the forum, over the next 3 days. But it does not fit everybody. I think that's the bottom line.
Yeah, it depends on the risk profile, and you're absolutely right. We're going to see and hear a lot about that on stage. Mathieu, thanks so much. Mathieu Chabran, our co-founder of Tikehau Capital.